Hi, welcome back to Lockbox Lunatics. I'm Chad Kamp with Exit Realty Coannah here in Phoenix, Arizona, in the southeastern part of the valley. Our normal co-host Steve is unavailable today. We've got a special guest, my beautiful wife Tammy Kamp. She's with Coannah Financial Solutions.
Hello.
Thank you for joining us. I know this is something you really didn't want to do, and I roped you into it, so I appreciate you coming in. The reason I've got Tammy on today is Coannah Financial Solutions is a tax planning company. And so Steve and I have been talking recently about the big, beautiful bill, whether you love it or hate it. And so Tammy has some unique input into the bill, some unique thoughts. So we thought it'd be great to share that with the viewers and how this is going to benefit you. So there again, Steve is indisposed. I'm sure it had nothing to do with his weekend golf getaway with the guys, but he's feeling under the weather. So our thoughts go out to you and hope he recovers quickly. So anyway, so we hear a lot of different angles on the big beautiful bill. What are the highlights that come to mind that's going to have a positive impact just for your normal everyday tax preparer or tax person that you prepare taxes for?
Probably depreciation is back to 100%. Bonus depreciation is back to 100% for assets put into um, service after January 19th.
So
Tip,
of this year?
yep,
Okay.
of 2025. Tips are income tax free as well as overtime. Those are pretty
Okay.
huge.
Yeah, that's phenomenal because we know a lot of individuals that work in the service industry, and those tips are a big part of their income.
Yeah.
You'd be surprised at how much some of these servers are able to make on a tip perspective. And this bill has been you either love it or you hate it. I'm sure there are some components once we get into it that we may not agree with entirely. But realistically, you'll hear individuals talk about how this bill is only helping out the rich.
Yeah.
What's your thoughts on that whenever you see who's going to be benefiting from this? Is it going to be strictly the rich, or do you say a trickle down effect?
No, it's mostly geared towards the middle class. The working person
Okay.
is pretty much gonna
Yeah, because I
see
don't.
some tax cuts.
So when you're doing tax returns, I don't imagine you'd see too many individuals that we deem rich. Rich is relative, right?
Right.
That are working tables.
Yeah, right.
Okay.
Exactly.
And so those individuals that are actually getting overtime as well, like, our son-in-law is a police officer, he gets a lot of overtime.
Right.
We get nephews that have jobs and they get overtime. And so this is going to benefit their families.
Yeah. Yeah.
Okay. Yeah. So, before we go into any more in depth on what you had talked about there, explain the difference. Okay, so this podcast is geared towards basically anybody that has anything to do with real estate, right? So, we're trying to get information out to the consumers, buyers and sellers. We're also trying to get information out to agents, brokers, anyone that has anything to do with the real estate world. And one of the things that we've seen over the past 23 years is people don't give proper attention to planning. So whenever you prepare someone's taxes, one of the biggest issues that you run up against is whether they owe taxes or not.
Right.
Right. And tell me the difference between, the tax preparation side of things versus the tax planning side of things. So when you're actually doing the tax return, preparing the tax return for somebody, and you identify, you're paying too much in taxes versus, tax planning.
Right. Well, tax preparation is basically just putting the numbers together that have already occurred. It's kind of after the fact prep. Tax planning is looking at your situation and figuring out how you can save taxes going forward before the tax return actually has to be done.
Okay. So let me ask you this. So from a tax planning perspective, when is it too soon to get into a tax planning? Okay, my income is $100,000 a year. Is that something that,
Oh, you mean,
right?
okay. Probably well, one, if you don't owe taxes and you're getting a big credit back, probably is not going to help you. But generally speaking, if you're owe at least 50,000 in taxes or more, you can do tax planning. And when I say owe 50,000 or more, I mean even being taken out of your payroll. Maybe you don't owe that at the end of the year because you've already planned for that, but if you owe probably 50,000 or more, tax
Okay.
planning's for you.
Now I went to Chandler High School, so help me do the math here. So if you're paying 50,000 a year and you're a W-2 employee,
Mhm.
so that would be
Two to,
4,500 a month going to taxes
oh, yeah.
about. Okay. So here's the thing. If you're paying, if you notice about 4,500 coming out, now is that per individual or would that be like a married couple?
Married couple.
Okay. So if the household,
Hmm.
okay. So if the household income is paying or is being withheld 4,500, is it one specific category in tax, or is it just kind of, well, are we talking just federal or federal and state? Do you have to combine the two?
Federal. I'm just going with federal because every individual state has different laws and different things that need to be considered. So just as long as if you owe 50,000 or more in federal, it's gonna help you in state as well.
Okay. So, and there's something that we've run into over the years too, before I go to my next question is you're not a CPA, are you?
No, I'm an
Okay.
enrolled
Why
agent.
not? Why are you an EA versus a CPA?
CPA is a tax or a CPA is just a bookkeeper, basically. I wouldn't say just bookkeeper, but they're an accountant and they actually certify or audit financials and release an opinion, I guess, to the shareholders and say that whether or not a company is good for investing in. Where an enrolled agent is an actual tax professional and we are educated and licensed specifically in the area of tax law.
Okay, so a CPA is licensed by the state,
Right.
and are you licensed by the state, or who's your licensing entity?
Uh, the Treasury Department, so at the federal level.
Okay, so I already knew the answer to that question, but so you can basically do taxes throughout the entire U.S. You don't have to have any type of reciprocity between states to be able to perform your job.
Right. I actually have clients around the country or around the world, so I can do taxes for pretty much anybody.
Okay, so this is a trick question. I know you've got a lot of clients on different continents. Do you have anybody on Antarctica?
No.
Come on, you got to ramp up those marketing efforts.
Yeah.
So, all right. So, back to, this big, beautiful bill. We were talking about, overtime not being taxed. When you say it's not being taxed, because they used to collect a higher rate out of that and you got it back at the end of the year. So you're saying if I make 50,000 a year and I get 20,000 in overtime, there's going to be no tax on that 20,000?
There'll still be employment tax. It'll still have to go on your W-2. It'll have to be separated out and you'll still have employment tax, Social Security, Medicare. But income tax, it will be tax-free.
Oh, okay. Cool. So what if I just wanted to work like straight overtime and not get any regular pay?
Well,
Can that work?
no, because you have to first work your regular to get overtime.
What if I don't work a lot to begin with?
Oh, that might be a problem.
All right. All right. So some of the other things that were in the big beautiful bill are in regards to, oh, what is it? Buying a specific area from an investor's perspective.
Oh, the zone, the
Opportunity
opportunity
zones.
zones,
So
yeah.
opportunity zones. So that's going to free up some opportunities,
Mm.
hence the term opportunity zone,
Yeah.
right? For investors to be able to come into. Can you tell us a little bit about how that works? What the benefit is to an investor coming in and buying in an opportunity zone from a tax perspective?
Based on the time that you hold it and end up selling it, you can do it uh, capital gains tax free. So you won't have capital gains, but it's depends on your holding time, your holding period up to 10 years. And
Okay.
I think that what they did was reset the clock on that one because it was set to expire in 2026, I believe, maybe
Okay.
2025, but it was set to expire. And they've also added rural areas to that.
Okay. So in essence, this is going to actually help the investor in regards to saving money on taxes, number one. Number two, this is going to create opportunities for some more affordable housing,
Hmm.
right? So investors are going to be able to come in, find some locations, buy some property, fix it up, and kind of help improve the community, as well as give opportunity for some low, some housing where individuals aren't going to be able to typically get it. So, from a from affordable housing perspective, this could be a very good thing. I typically, when that first came out years ago, I remember I had a lot of investors reaching out to me saying, "Hey, find me these opportunities in these affordability zones, or what's the word I'm looking for?
Opportunity.
Opportunity zones, thank you. And so, find me a property in these opportunity zones so that I can go ahead and invest. And then whenever appreciation happens, I can sell it and get it tax free. We're helping with some affordable housing issues. Some of those investors that have bought those properties, I also manage those for them. And so whenever I am looking at filling those units, I can attest that it's affordable housing. It's a lot cheaper than what's going on in the open market. So, um, anyway, is there any other thing in the bill that you think would be beneficial to talk about? And we talked about two of the components. Well, the third, this was the third. Anything else that you'd like to highlight?
Well, the depreciation, the bonus depreciation came back at 100%. Because this year was gonna be at 40, because with the Tax Cuts and Jobs Act, it kept declining every year. So now it's back at 100% bonus depreciation.
Okay, what does that mean?
It means, when you put something into an asset into service, you can depreciate it 100% in the first year.
Oh, okay. Okay. So that's some good opportunities. Well, that's going to stimulate the economy then, right? Because people are going to be purchasing these assets. And so when you say assets, are we talking strictly real estate, or are there other?
No, it's equipment.
Okay.
If you're buying equipment, it could be, it's not going to be obviously real estate buildings.
Okay.
So
Okay.
those you don't get 100% depreciation, but things that go into service, like equipment and other assets for businesses, you can get 100%.
Okay. So then that's gonna trickle down to the workers in that are putting that equipment together,
Mhm.
parts, labor, things of that nature. So hopefully that'll be a good thing to help spur the economy. I know that are going to be looking at potentially signing a crypto bill, which has nothing to do with real estate or taxes, but I think there's some tax relief or some tax help. What would the proper word be for what they're on the crypto side of things?
And I don't know a whole lot about it because I just
Well,
touched
they
on it
haven't.
yesterday, but I think
Yeah.
it's more just like a credit. They're
Okay.
gonna issue maybe, I'm not sure, to where if at a certain amount, you don't have to worry about capital gains or income if it's at under a certain amount.
Okay. So they're really looking at reducing taxes on the middle class, because now here's the thing is yes, there are individuals that are wealthier, that are getting into crypto, that are getting into investment opportunities and things like that. But the thing is, as us agents, and you've seen this over the course of my career that we've been together the
Mhm.
last 20 plus years. And as a matter of fact, just last week, where you have somebody that doesn't recognize the opportunity that's in front of them, and they don't capitalize on and take the risk with an opportunity that presented itself that typically doesn't isn't presented to everybody,
Right.
right? So some of these inducements for investors, so for the general public out there, if you see an opportunity, don't get polarized with fear. Reach out to individuals that have been in whatever business venture that you're looking at going into, and talk to some experts. Obviously, educate yourself before you make any type of decision to make any type of investment, right? So, but here's the thing: is don't get so polarized and be listening to all the fear mongering that's going on. There again, I've said this on this podcast before. The media, they sell one thing, and that one thing is drama, right? And so they have enough truth in there to at least make you aware of what you need to research. And then you reach out to the experts and find out, hey, what does this actually mean to me? Right.
Mhm.
And how can I benefit? Is there a way for me to make some sort of investment to be able to further and put my family into a better financial situation down the road? A lot of these things, the get rich quick schemes, obviously you got to be mindful of, right? But a lot of these aren't necessarily get rich quick schemes. They're investments. These are long term holds, right?
Right.
That they're going to see benefit from. I know you just did a tax planning. was it last week, and you saved this Arizona couple what $180,000 in taxes over the
2 years.
over
Yeah.
a 2 year period,
Mhm.
right? And then they're going to be able to continue to advance that every couple years
Yeah.
along those
Yeah.
lines.
So essentially, there are techniques or options that you can do where you do make some money a little bit. It's definitely not something that your money isn't going to have a return, but the biggest benefit's going to come where you're saving your tax dollars.
Yeah.
So instead of it going to the IRS, you're going to put it into an investment.
And so anytime that you can take some funds legally,
Mhm.
and instead of sending it over here where you're really not going to see as big a return on it, and be able to put it to use for your family, that's always, a good use of your funds. So I know this was a quick episode. We're thinking of Steve. He should be back with us next week. Thank you so much for filling in and giving us just a quick glimpse into what they call the big beautiful bill.
Yeah.
So if you have any suggestions on topics that you'd like us to cover here at the Lockbox Lunatics, go ahead and put them down in the comments. If you'd like and share these videos as well so we can get this message out to the masses, we'd greatly appreciate it. So hey, thanks again for joining us, and we'll catch you next week. Take care.